Good morning, ladies and gentlemen, and welcome to the Zinc Media Group Interim Results Investor Presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Please just simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and, where appropriate, publish responses. These will be available via your Investor Meet Company dashboard. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll, and if you would give that your kind attention, we'd be very grateful. And I'd now like to hand over to Will Sawyer, CFO, and Mark Browning, CEO from Zinc Media. Good morning to you both.
Thank you, Mark. Good morning, all. Thank you for joining us. For those that are new to Zinc, welcome along. My name is Mark Browning, and as Mark said, I'm the CEO of Zinc Media Group, and Will Sawyer is our CFO. So thanks for joining us. The way this will run is that I'm going to give a short presentation. It's going to pick out the main headlines, the main themes from our interim results. We'll look ahead to next year, to 22, and we'll show some of our latest work as well. And at any point, as Mark says, you can place a question, and we will do our best at the end of this to answer as many as we can. So let's get underway with the main headlines, the key performance headlines that summarizes our interims. In simple terms, we expect revenue to be up this year on last year. We expect revenue to be up in the second half of this year against prior year, and we expect to be profitable in the second half of this year. We have had our biggest ever returning series volume commission, which I will give you some details on in a moment. We announced that last week. Our revenue diversification strategy is going very well. Lots of new clients are now spending with Zinc. We're still rooted in that heritage position of premium specialist factual, but we are broadening into lots of new markets. We have our first advertiser-funded series in our parlance, AFP, advertiser-funded programs, but this is a series. We've got our first Discovery Commission, our first commercial-funded podcasts, our first Amazon Audible series, our first production for Super Collider, which we mentioned last time but couldn't say it was for Red Bull. This is all new business, all new that's come off initiatives launched last year as part of that transformation plan. Cash has remained good. It's remained good since period end as well. And with revenues now in the second half of the year at levels for profitability, we've got enough cash to continue to strengthen our revenue performing teams. I'll give you a bit more flavor of that. Margins are doing better than we set out 2 years ago. They were the problem for the group, and we set out to improve them by 6%. We're currently tracking 8% higher than when I joined Zinc. That is a significant change. It equates to a significant amount more profit on like-for-like revenues. Had our revenues stayed at the levels, just the levels they were before COVID, that change in its own would have seen £1 million improvement to the bottom line. The pipeline is strong for next year. Bookings for 2022 are 5 million, which is 1 million ahead of this time last year. We'll pick up on some of that, all of that, as we go through. Just to remind you of the strategic priorities that we updated at the start of this year. These are the critical KPIs, the critical performance indicators that drive this group forward. And starting with revenue growth and diversification, both are critical. Revenue growth is going well in the second half of this year, but not yet back to pre-COVID levels. It's improving. It's hard. The market has been very sluggish during COVID. We need more volume, and it is the single focus, the absolute focus of the group going forward. On diversification, that's going really well. I'm very, very pleased with this. This diversification into new markets will ultimately drive the revenue growth as well. And these new businesses are performing well. These are businesses we launched in 2020 in the midst of lockdown. And collectively now, they have brought into this group over £6 million of previously untapped revenues. This is, in effect, new money for Zinc. Super Collider, which was the label we launched this year, it's barely 6 months old, came with a new project for Red Bull. It's just finishing its second production, which we're going to announce in a few weeks' time, and it's in budget conversations about its third project, which, if that comes off, will be its biggest so far. It launched in May. This was a strategic hire aimed at rapidly accelerating us into a new area, and it's delivering for us. Zinc Communicate is growing fast. I'll expand a little more on Zinc Communicate in a moment, but it's up 161% in the first half of this year compared to the first half of last year. There's lots of new businesses umbrellaed under Zinc Communicate. It's in new markets of video marketing, branded content, podcasting, all areas now that are booking new revenues for us, and it has the potential to rapidly accelerate in 2022 and beyond. We have track record in this space when we were at ITN. I'll give you a case study in a moment. And then there's Red Source. Red Source was brand new this time last year. It's now won over £4 million of new commissions, delivering partly into this year, partly into next year. One is from a new client, Dave, part of UK TV, and the other, this very substantial new order from Channel 5 for a 52-episode run of previous IP that the group's had for many years. It is a returning series, but this group has never won it at this sort of scale. Looking at the pipeline for next year, we've mentioned this each time we talk to you. It is, in effect, a probability triangle. The more advanced conversations are with our buyers, the higher the probability that piece of business converting. So this is, in effect, the probability of revenue coming through. And as I say, we're $1 million ahead of where we were this time last year. But we'd like, in all honesty, want to be further ahead. $1 million ahead shows where the market is recovering, but we'd love to be further ahead, and that is absolutely the priority. We've booked nearly $5 million for next year. The critical thing is to look at this highly advanced conversation gate, this £9 million. In there, to qualify for a piece of business to sit that far in our pipeline, it has to have passed certain tests, like it has to be with a broadcaster for sign-off or with business affairs for contracting. Most work in there has either got a contract or has been verbally commissioned, but not fully signed off. So we hope that a large proportion of that 9 million converts in the next few months and can then begin production in 22. Then there's another, 34 odd million that could all drop next year. It's sitting in either early discussion or getting some sort of positive engagement with clients. So the priority for this next quarter, October to December, is to convert as much of that 9 million as we can. And in there lie a number of transformational series, actually. There's big opportunity with a major streamer, 2 large talent-based feature docs, and another 7-figure returning series. So we're very hopeful that we will be able to push a lot of that through this side of Christmas. I want to talk a bit about our structure and our people. It has been an evolving journey. We now have a structure at our senior level that's pretty simple. But critically, it's a structure that can scale the group within its current structure. We don't need to add more people to this structure to scale this group. We have a simple structure of 3 managing directors of our TV, 2 in TV and 1 in Zinc Communicate, of our business divisions. And then they are supported by those of us who work across the whole group, which is myself, Will, the CFO, a new CTO, and HR. Perhaps the pertinent point here is not just the simplicity of it, but the fact that 6 of the 7 team have joined in the last 3 years, and 3 have joined in the last 6 months. Which means the core leadership is new, they are hungry, they are driven, they are aligned and rewarded in the same way that we all want to see through value creation of our market cap. And the final piece of this jigsaw was Tanya Shaw. And Tanya Shaw, is the new MD for London and Manchester TV, which we announced last week. This division, the London and Manchester television businesses, is the largest part of our group. It has really good growth potential. And now we have one of the industry's most respected creative leads running it. Shine TV, those of you who know media well will know of Shine. You'll know it probably as Endemol Shine, but Shine TV was founded by Elizabeth Murdoch in 2001, went on to become Endemol Shine after a merger, and Tanya has been the MD of Shine TV for the last 6 years. So she's very well connected in the TV sector. She's overseen some of telly's most lucrative, factual, unscripted formats, but she comes from a range of factual. She comes both from specialist factual, but more recently from perhaps the more lucrative popular factual and factual entertainment. So hits like MasterChef and Hunted and The Island are the area that Zinc hasn't been in, wants to get into, and are the most lucrative parts of unscripted. So the hire gives us this springboard to now broaden our offering into the popular factual entertainment space. And those formats obviously give greater potential for IP exploitation, international expansion, and so forth. There's no question that she'll probably bring new talent with her as well. We do have room for a handful of new hires within our plans, which we haven't been able to make during COVID. So now we have Tanya in, we can accelerate that part of our business. So that is a really significant new hire. It's certainly in our market, repositions Zinc further as an exciting new prospect. And there is a lot of chatter around what's been going on at Zinc in the last couple of years and what will now go on now that we have secured someone like Tanya to join us. On the finances, on the margin side, those of you who've heard me from my first ever conversation, whether in the company or externally, margins have been the absolute key focus. It was probably the biggest single weakness of the group. So the number one strategic priority, and we've continued to significantly improve gross margins. They're now 8 percentage points higher than they were when I joined 2 years ago. From 25.5% was the gross margins to 33.6. Will, do you want to pick up on some of this?
Yeah, so that's the chart on the left is the total group gross margins, which have increased by 8 percentage points in the last 2 years. And that's mainly been driven by London and Manchester TV production gross margins, which are on the right. So we've talked about it before, where we invested in our own editing facilities 18 months ago. We built 15 edit suites with state-of-the-art kit, which means that we no longer outsource the post-production on programs. And we've also improved our workflows, and we also have a focus on margins in our production management team. The management team there are rewarded on improving those margins. So those production gross margins, as you can see on the right, have risen from just shy of 25% in 2019 and are expected to be over 32% in the full year this year. And that's even better than we anticipated when we set out the ambition in 2019, and considerably better than achieved by competitors. Cash-wise, as at the end of June 21, cash remained buoyant at 5.5 million, and since then has remained between 5.2 and 6.2. And as at today is 5.5. Now, some of that cash will be used to fund working capital related to the increase in activity across the group in the coming months. But we are in a good position to be able to do so because of our tight cash management over the last 18 months or so. We just look at the results for the 6 months ending June. Revenue was flat year on year. In both the first half of 21 and the first half of 2020, they were both significantly impacted by COVID lockdowns. 1.4 million of revenue that was due to be delivered in the first half of this year was delayed due to the lockdown. and is now delivering in the second half of the year. And it was really the programs that relied on access that suffered the biggest delays, as individuals or institutions were reluctant to allow filming until the vaccine program was sufficiently advanced. Revenue mix wise, as a result of launching new businesses within Zinc Communicate, revenue from that division has grown and now represents 13% of group revenues versus 5% in the same period last year. We posted an adjusted EBITDA loss of 1.1 million, which was driven by the COVID impacted revenues. And that was higher than the prior year as we continue to invest and retain our business winning team in anticipation of the revenue returning in the second half of the year. And in terms of the second half of the year, we expect to be profitable in the second half. And full year 2021, we expect an increase in revenue versus 2020. And our balance sheet remains robust to continue to invest and realise the growth ambitions across the group.
Okay, so let's turn to some of the programs that we've been making. I'll give you a flavour of what's been going on. A few examples, I can't pull them all out, but we did mention some of these at the start of the year. In the first half of the year, there was a lot of Zinc TV on our screens, and in April I shared a lot of that with you. They included the Blitz Spirit with Lucy Worsley, which was on BBC One. Trump Takes on the World for the BBC, this time BBC Two, and Ian Wright authored documentary for BBC One. There was lots going on, and I gave the full update on that in April. More recently, since we last met, ITV documentary on 9/11. Again, a very premium piece of traditional Zinc TV, core premium factual from the UK's big broadcasters, the BBC and ITV. ITV now come to Zinc for their premium docs, big events, national events, global events. So very much in the sweet spot of Zinc's traditional space. That program, by the way, also selling very well globally. So these programs, even though they are high-end, serious, current affairs-driven, factual, they do sell very well internationally. And they're, I guess, the illustration of the heritage and the credentials of premium documentary making that we're all familiar with. I was certainly familiar with when I joined Zinc. But more recently, we're diversifying beyond those traditional markets. We're now winning business in commercial podcasting. We've done our Lions podcast series since we last met, sponsored by London Pride, the beer. We've got our Amazon Audible series in production, and most recently, the project with Super Collider from our newest label. I mentioned it last time. I couldn't say who it was for. It was for Red Bull, as you now know. And it's a new client, but it's still very much premium TV. In fact, it's probably our most premium TV in terms of price per minute of television. But I think the key thing I'm impressing on everybody here is that this is the new world. It trades on our heritage of premium factual, but it's new world television. It's commissioned by a brand, and it's made for social. It's all over YouTube. It's showing on Red Bull sites and Red Bull TV. It's very much new Zinc, working with clients, trading on our premium content routes, working with YouTube stars, working in podcasting, and creating content for social. So I hope that gives you a flavor of how we're seeing traditional Zinc becoming new Zinc. It wouldn't have happened, the whole Red Bull project wouldn't have happened if we hadn't hired Mike Christie in May this year, because old Zinc couldn't win this sort of business. And there's lots of positives around this case study. Super Collider is in a new market. It's in a different space. It's event-based telly. It's live action. It's sport. It's commissioned by a brand, not a traditional TV commissioner. It moves much faster. It's idea to commission in a much shorter period of time, but it's still at very significant premium values. And brands trust Mike to make these big scale premium event set pieces. This is on the screens. I hope you can see it. It's the largest free running stage ever built. in an enormous hangar in West London, and then raised up to an angle of 45 degrees. It's the height of 4 houses. The activation then that Red Bull put behind it was really impressive. These are some screenshots, and online you can see all this. If you go to Red Bull's site, you can see how the game is played. You can see the set, you can get interactive with the machinery, and you can see how the project came together. All of this created through New Zinc. I think it illustrates the journey we're on. Still winning premium factual documentaries for BBC One and for ITV, but diversifying into this new world of brand and digital first content and into those markets. So I want to play you a little of the story behind the human pinball for Red Bull from the new Super Collider in Zinc Media Group. So if you could play that, Mark, please.
3, 2, 1, action!
Having this 20-meter toy opens so many doors, and I can continuously flow.
We created a place where gravity doesn't work the same.
We're building the world's biggest pinball machine, and Pasha's the ball.
You look down and it's like a 4-story building. You're gonna fall down.
That's one big wall.
What you guys have created here is really a world's first, and this video is going to be a unique, special piece.
All right, strap up, Pasha. Go for a ride.
How did you like that, guys?
All right. 3, 2, 1, click.
I remember when I first started, I was like, I didn't really want to show people that, because I felt it's like a secret power I shouldn't share. I should keep it to myself. But then the internet came, and obviously,
Pasha is one of the most famous freerunners in the world. He's one of the first athletes who broke out of this freerunning circle and went into mainstream.
He was one of the first athletes to have multiple world championship titles in a row. He's got the biggest social following in the entire sport right now.
I feel like I grew up like as an active kid. I used to watch a bunch of Ninja Turtles, Chuck Norris, Jackie Chan, Bruce Lee, all those action stars. And I always wanted to be one of those. I was like, and I remember my mom told me like, you know, this is movies, this is no real thing. And I got so sad. I was like, no way, so Jackie Chan is not doing all these things for real. I just remember it was a big drama in my life. And then I remember they built this bridge in my town where like they put like this slanted wall as a support for the bridge. And me and my friend just started sliding there because we thought it was the biggest thing ever. And also there was like some extra supports for the bridge where we found out that we can bounce off. And I'm just like a little ball doing my little movement in between those obstacles. So why wouldn't I be a pinball human?
Instead of going to bed, I sometimes take a walk over the bridge. My grandfather says that when things get to be too much, you should remember that nothing is forever. To take a step back and always remember to dance. Remember to dance.
I know Mike Christie, he's the man. He filmed like Jump Britain, and he filmed some biggest parkour documentaries. He's the man. Like I feel so lucky with the team.
The very first deck that Nico sent me was effectively a kind of parkour course at an angle, a 45-degree angle. And then it was going to be lifted up by forklift trucks and stacked high on shipping containers, so it was quite crude. It was almost like the pinball idea was kind of an event, and we were kind of filming it. And I knew that wasn't the reality. I knew it was going to be a film, but initially it started life like that. I could see it had kind of this amazing kind of action potential, but I felt quite strongly it needed a theme, because pinball always has a theme. And then we had this kind of crazy long list of ideas. The one that had a gold star next to it was this around the world in 80 moves. The first brainstorms were Pasha and Nico, but also Frosty. Frosty joined in.
Frosty is our sports director, which is quite important to have somebody communicate with Pasha and his vision, but also somebody who can communicate movement to our director.
Guys, for this shot, this is what's gonna happen. Pasha is falling at the end of ball 1. As he falls backwards, this flipper is coming up to catch him. So we're gonna have you stepping off of this and jumping over here, but I'm gonna just pull the flipper up, and I'll just have you sort of jump and slide down and run up the channel. And as you run up the channel, We're gonna change out of boss mode lighting. Up, down.
So look, you can see there, it's. I'd love to tell you the premium that it was, but I'd probably be breaching client confidentiality. But when you consider what the linear television spends and you see what these global brands spend for premium TV, why would they now come to Zinc? Because they trust it, they see its heritage in premium television, and now they see it bringing in new people and reinventing itself so that it can make television in the new world of brands and rights holders and content owners, and distributed for social, commissioned by a brand for social. So let's look at some of the other up and coming TV and radio programs. Back in January, those that you who listened to the presentation then and read our RNS releases, I was prioritizing winning our first Discovery Commission. They were identified, we identified them last year, and the team have very clear projects that I want them to try and move into, and Discovery was one of them. And I said at the time, we need to win our first Discovery Commission this year, and we have won our first Discovery Commission. It is now in production for a potential returner series. It's with Turn TV in Scotland. Channel 5 was a strategic priority, a big customer of mine in my previous role, one that I want to develop into a big buyer from Zinc. And they have just ordered their largest ever series from this group, a whopping 52 episodes of Bargain Loving Brits in the Sun, which is in production right now. And our first ever commission from UK TV, a new male skewing police series, which will be for Dave, that is in production at the moment as well. Just a few of the many things that we've got going on. A little bit on the market. I've only got one slide this time, but this is the latest information from Ofcom. And the way this works is all the broadcasters have to report their data to Ofcom, and Ofcom pull together what they're spending and what they're commissioning and so forth into an annual report that comes out in August. So it was published in September, just a few weeks ago. And it's on the health of the production market, the content market. And prior to COVID, UK content market was thriving and growing year on year at 3.3 billion. That is the size of the UK's production market in our economy. So it's a very investable market. Pre-COVID, there's every reason to believe that the growth will return post-COVID. We live in a content hungry world. It's the means to engage consumers, whether you're a brand or a supermarket chain or a rights owner or a publisher or a social platform, or indeed an old world TV channel. Content is how consumers are engaged. So everybody needs content. You can see the growth of the sector. But look at the dip in 2020. The whole production market, in effect, went backwards 4 years to levels in 2016 and 2017. The UK production market was hit really hard, falling back to lower than 2016 levels. That's 5 years back. And that's the context in which we're having to do this turnaround. It's why I hope you can all see the progress in the underlying machine that we now have in the group, but it's why the fruits of that turnaround have been delayed, because the revenue, actually the area that Zinc did well at prior to COVID, has been substantially hit by this market contraction. So the focus is really simple. It's diversifying into new markets to make sure we are more resilient going forward, but pressing on as a content creating group, not just a TV production company, but trading on that wonderful heritage and trust to take us into these new markets, all of which puts us in a really good position for as this market returns as we come out of the pandemic. So a little on the shareholder and investment case for those to be reminded of, or for those perhaps that are new for the first time. Let me just summarize why Zinc has had the difficult 10 years it has. Why wasn't it profitable or able to generate cash despite having £30 million of turnover in 2019? And critically, why we can now believe it will be. What do you have to believe to continue on this journey? And there are 5 reasons Zinc historically underperformed. TV margins were too low. They were winning business unprofitably. Now they're up 8%. Simply on a like-for-like case. Had COVID not happened and we were doing 29 million, we'd be £1 million more profitable because of that one change. The loss-making businesses that were pulling a drag on the group have unfortunately had to be closed. We did initially have a plan to turn them around, but when COVID came, it was simply too much pressure on the group's balance sheet. So they were shut. The group was overly reliant on a small number of customers. It has a very strong heritage in BBC and in UK PSBs, the public service channels. But it needed to diversify, and it is diversifying now, as you can see, with the 6 million plus of new business that this group previously was not able to attract. The whole culture has been reinvented. Employees were not incentivized on profit. There were very few incentivization schemes. Where they were on revenue. Now everything is measured on profit-based performance, and all of that is how we reward people. Whether you're a production manager running an individual show, your reward is based on the margin you deliver. And those that are business generating, it's on the profit that they deliver from the business they generate, not just the volume. So all of these things have been addressed, and then this spine of the group where we were a collection of small siloed companies, there's now been this investment in the center, in the core, in the scale, the economies of scale, and that is proving to help drive margins too. A little illustration of just that impact in the group. In 2019, as I say, we did 29 million of turnover, but only 100 grand of EBITDA on 29 million. On a like-for-like basis, that 29 now, with all the changes we've made, would drive £1 million to the bottom line. But we need to get back to that level. We need to get back to the 25 to 30 revenue levels. And we're making good progress in the second half of this year with our run rate back at that sort of level. We're now tracking at a run rate of around 25. But we don't want to, we're not aiming for 25 to 30. I left a company that was twice this size. We want to be 50 million plus turnover business. And what you then start to see, and we typically see it once we're north of 40, is you get another kick on the scale stakes, and margins become easier to extract once you're up to 40 and 50. So how do we accelerate the group to over 30, up to the 40, 50 and beyond? The single focus now, with all of the progress we've made, is on getting revenues back as fast as we can. Obviously the market permitting, but we've got to believe, and I believe, and I see it, that the market is returning. So what are the things that are going to make us return that revenue to that growth? Now we know that everything is sorted. That means we can be profitable and significantly cash generative on previous revenues of around 30 million. We need these 6 things to happen. We need current clients to spend more with Zinc. Anyone who's run a business knows it's easier to get your current clients loving you more than it is to get someone to fall in love with you for the first time. So getting current clients to spend more is a key priority. And the case study I would give you is the Channel 5 commission of 52 episodes of Bargain Loving Brits, where they previously commissioned 6 or 8. We need new big spending clients from new markets. And the case study there would be Red Bull. As soon as we announced that, we're able to trade on this new space. It's a premium client. And before Christmas, we will announce a new premium client to join Red Bull. We need more diversification to reduce any individual risk of a single client and new businesses. As I've shown you, the new businesses we launched last year in the midst of the pandemic have collectively now found another 6 million of new money into this group. The Zinc Communicate business is a potential highly profitable, highly accelerating business for us. There are 3 new businesses under that umbrella and the historical publishing business. Each of those new businesses this year is generating north of £500,000. Small. They've been going less than 12 months, some of them. But the critical thing is they all have the potential to scale. They could all go from £500,000 to 1.5 million next year. and they could go from 1.5 to 3 the year after. When we ran ITM, we launched this area of business from nothing to 12 million quid. We don't even, maybe we get half the way that we did there. But that would be significant for Zinc, given its current position. And the critical thing is, those businesses are at higher margin. Their gross margins can be 40, 50, or 60%, whereas Telly sits in the low 30s. So that's a real focus for us. We now have a new London MD who's starting this week. New hires will now be able to follow. We're a couple of hires short of a full squad that we need for London and Manchester. And then there's acqui-hires. We've done one of these, and Super Collider is that. We hired Mike and his business. He joined in May, and you can see how well that has worked for us, because it's in effect underwritten. It's paid for in the year, and that is working very well. Now, we are in conversation with a number of others who could also join in a similar way, where they would join the group and they would bring business with them, and they would accelerate our revenues in the short term, and then we would be able to invest in them for further acceleration in the medium and long term. And we hope to do 1 or 2 more of these in the near future. These 6 things will address the revenue problem, the need to get revenue back up, market permitting, to the sort of levels we now know we can do, and we've done before, but when we do them this time, we're doing them at profit. So, a little illustration of how that will build. This is how we'll scale, and the focus for the senior team in this next 3 to 6 months is strengthening the business winning squad, particularly in London. Adding to that, we've started this with the new hire of the MD, boosting our revenues with 1 or 2 of these acqui-hires, as we did with Super Collider. All of this is doable within our current means, within our current cash and balance sheet means. So then as revenues return, so profitability and cash generation we now know will follow, because we can see the underlying improvements in margin and efficiencies, and then in turn our market cap share price will improve. That then unlocks further momentum and allows us to oil the wheels of further growth. So we can scale the group through both organic growth, and once all that has happened and we start to see that progress, more ambitious acquisitions in the future. So it's all moving in the right direction. We want it to go faster, and we have a plan, a 6-point plan on how we will make it go faster in the year 18 months ahead. So that is our update. I see some questions are flying in. Mark, do you want to?
Yeah, that's great. Thank you very much indeed, Mark, and also to Will for updating investors this morning. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab that's situated on the right-hand corner of your screen. But just while we give Mark and Will a few minutes to review the questions that have been submitted already, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet company dashboard. And as usual, I'd like to remind you that your feedback is important to the company, and immediately after this presentation's ended, we'll redirect you in order that you can provide your views and expectations directly. Mark, Will, before we perhaps look at the live Q&A, we had a number of pre-submitted questions, and perhaps I could start off the Q&A with that. The first one reads as follows: are you able to produce all the programs you'd like currently from a COVID point of view?
A simple answer is yes. There are some big ambitious projects we have on the international markets that will require COVID to further reduce, but everything we currently got in our plan, we can do. And during the lockdown, Telly reinvented its production workflows. We know how to get access to people. We filmed the whole Trump series, which was an international production from the US and the Far East, all in lockdown. So we found new ways of working, and all the health and safety considerations, those sorts of things, are all in place now. That's all within the working budgets. There's no, as you can see, no major impact on margin. There is impact on cost, but not on margin, because we found other efficiencies. So no significant risks to the sorts of programs we want to make. The risk is to the market more, and confidence returning.
Thank you, Mark. Next kind of question really relates to around the cash position of the company. On some of the shareholder chat sites, there's talk of Zinc running out of cash. Are these rumours true?
No, they're not. I mean, we I wish more people would join in that, and listen to this. It is frustrating if that's the case. We make it clear every time we're as transparent as we can be on this. So if someone chooses to then jump on and stir that particular narrative, then it's not founded in evidence, is it? I've given you the evidence. I've shared the cash position. We do it every time. So yeah, I understand how these things go, and I don't spend a lot of time reviewing this. We have a partner of ours, Western Advisors, who manage our shareholder engagement. So cash is good. Our balance sheet is strong. There'll be some reductions as we do working capital if we win some of these big programs. But we've got all the means we need to do everything that I've just laid out. And as we sit here today, we're sitting on between £5 and £6 million of cash. We can do what we want to do. So I'm afraid that is mischief making if that is the case.
That's great, thank you. Turning on to the next question, what do you make of the potential change of ownership if Channel 4, and does this present a risk to your plans?
So those that don't know, there's a consultation going on within government on the future ownership of Channel 4, which is currently owned by the UK, about whether it could be owned in effect privately, like ITV or Channel 5. Now, from Zinc's perspective, I see some risk, but more opportunity. The risk, and we've submitted a response to the consultation. And my view is that really the critical debate should be around the things that need to be protected to make Channel 4 different in the market and to grow in its market, which would benefit all of us who provide services to Channel 4. I think the debate should reside there and less on actually who owns a share certificate and who doesn't. And the critical things that should be protected, that Zinc would need to see protected in order to protect Zinc's relationship with Channel 4, would be a retention of their commitment, and actually I think an enhanced commitment to the nations and regions. Turn TV does very well for us because it is a highly trusted nations producer out of Scotland and Northern Ireland, and it picks up work from Channel 4 because Channel 4 is obligated to buy a lot of its programs from the nations and regions. But I can't see any government, this government or any future government, diluting that when the whole narrative in the UK is around levelling up. They're not going, I think they're going to want more programs to come from out of London. So I see opportunity there for us, who has a good nations and regions footprint. And then in terms of IP and exploitation, everything I'm reading from the DCMS suggests that any new owner would be obligated to spend more with smaller indies. We are one of those at the moment. Maybe we'll be a short-term winner in that while we grow, and then we'll get too big. But that'll be a first world problem to have. So I see more opportunity than risk, in all honesty, with any change of ownership. Or the status quo continuing, we could also work within that too.
Thank you, Mark. I guess the next question really talks about liquidity in the market and share prices. I've tried to buy Zinc shares in the last 6 months, but I can't get hold of any decent volume. Why is this?
Well, you're probably not the only one. So I know of a handful of investors who have contacted me direct saying they want to buy Zinc shares at a reasonable scale, but they can't get hold of it. They can't get hold of the volume that they want to enter at. And that is a frustration. It's a frustration partly because obviously we welcome that, but also we know we need that because our share price is very low at the moment. So it is irritating that we're in that position at the moment. That is part of the transition that will come through. We've got a lot of supportive shareholders who aren't looking to sell, is the crux of it. There's not enough volume of shares. If someone wants to buy at 50 grand, there's not enough volume to be able to get in at that level. We know there are quite a lot of investors watching the Zinc stock. We have a lot of conversations with people over the last year who are saying they're watching, they read the story, they believe where this company is going. And we expect liquidity, I guess, to improve fundamentally as the underlying financial performance starts to come through, and that will start to move the share price up. At the moment, our share price is priced on 10 years of underperformance, and that in COVID is not going to be fixed by 18 months of significant progress, but we can see that there is demand building. So I understand your frustration. That's some of what we're working on with our brokers at Singers.
That's great, thank you. And finally, the final real question that kind of ties into the previous one really is that you have a very impressive shareholder register for a company of your size. Can you tell us what they're saying to you?
Well, we've spoken to them all this week, pretty much all. There's one or two next week. The themes are we now understand why the group has struggled for so long. That is clear. And we also see that those difficulties, those problems, those underlying handbrakes have been released, have been fixed. So there is, I'm very fortunate. It's overwhelmingly supportive, 100% supportive. Everybody is in and is staying in and believes, while it might have been traumatic for those that have been in for 5 years or more, that there are plenty of signs that this company is on the turn. And they recognize that the pandemic has been very, very difficult for the market. So the fruits of that work, had we not had COVID, would be with us now. We'd have seen that £1 million come through to the bottom line. But I think, in all honesty, and this is what investors tell me, is that it's probably set the group back 12 to 18 months. So we've got to continue to work hard on the 6-point plan to drive revenues up as the market comes in. But we're in a strong position. We have a really good shareholder base for the size of our company, and you're right to observe that.
Oh, that's great. Thank you very much indeed, Mark. Well, look, that takes care of those questions ahead of today's event. Could I just turn to the ones that investors have submitted during the presentation today? And firstly, thank you to everybody that's taken the time to share with us your questions. Mark, if I could hand back to you, could I ask you to read out the question and give a response where it's appropriate to do so? And that Q&A will be on the right-hand side.
Okie doke. I'll just go from the top. So Chris, should you see advanced and highly likely, this is from the pipeline, I'm guessing, that element of the pipeline, the advanced and highly likely convert, do you have the capacity to take on the work? Would you need to take on more support for projects? We have the business winning capacity to convert it and to move it through, and the development capacity. We don't need to add in any extra cost. Then it would be cost of sale, in effect. And that would be, once we win this business, can we crew up and deliver? Well, we've just crewed up very fast for this Channel 5 series. We've got 4 crews out in Spain. The issue is not in our space. The answer is yes, we have enough capacity, and the answer is yes, we can crew up. So I have no great worries about winning new business in that sense. Michael has asked a question. Thank you, Chris, by the way. Where would you like to see gross margins ending up? Well, I'm very pleased I've ended up here. I think I've said this before, but that 32, 33 gross margins for television is slightly better than market average for small indies. I don't expect it to go up much more now, until perhaps we get 40 million plus revenue. Then some more economies of scale will start to kick in. The other thing would be if our revenue mix changes significantly. So they're at the level. That was the critical priority. I wanted to fix it quickly. We fixed it quickly, and they're now at those levels that they need to be at. Richard, that was Richard. So Michael, the video was really good. How much of your pipeline relates to this kind of brand content? Can you compare the time from pitching to converting compared to the more traditional routes? So how much of your pipeline relates to this kind of branded content? The pipeline and branded content is building. It's at the moment, it's probably around 10% of our pipeline in that sort of space. That will grow as these new businesses find more opportunities. I think the Super Collider pipeline is the one that excites me perhaps most. There's some big stuff on there. And the second part of your question was in terms of pitch time from pitching. I mean, there's a project we're working on now. We haven't announced it. The second Super Collider one. It came in 6 weeks ago, inbound, was commissioned in 2 weeks, in production this week, and will deliver in 3 weeks' time. That's why I'm a massive fan of diversifying into these areas within Super Collider and Zinc Communicate, because it's in-year business. TV is much longer. The cycle of TV at the moment can be 18 months. It used to be in factual areas that Zinc was in, used to be more like 9 to 12, so you could get good in-year revenues. That's slowed down. It's more like 12 to 18, but it will speed up again as we come out of lockdown. So Zinc Communicate, Super Collider, and finding those areas of UK TV particularly. The international takes a lot longer, tends to be where the opportunity is for in-year revenues. Philip, your current market cap is 10 million. Thanks for reminding me. Yes, it is. The current market cap is 10 million. Where do you see it in 3 years' time? Well, I think hopefully we all recognize the opportunity here is that it's low. It's part of the reasons, it's part of the attraction of joining now. And we can see from companies of similar size that this could be double or triple. It could be 4 times in that sort of time zone, really. Let's get a re-rating at some point next year as we start to turn the corner and the story starts to deliver through to the bottom line. There'll be a re-rating, and let's see that share price go double, triple, and then beyond. And that is in that sort of timeline. It's 12 to 18 months, really. Stuart, you make an excellent business case, but the weak share price doesn't give you flexibility to make acquisitions. What plans do you have to attract new investors? Better communication, more frequent communication. We have a good pipeline now of watchers who want to come in. Liquidity is the challenge. So I believe there's a very compelling story here. I think we'll be able to add more volume to that story before Christmas. So the plan is to evangelize that through meetings like this. We want to hold another investor day, ideally in the middle of this next quarter, to invite new people in to come and hear more about our story, meet us, and really ask the question, what do I have to believe in this? And I think we've got plenty of evidence that we can believe that this company's on the turn, and work very hard with our brokers to bring that in. But yeah, we want to see some movement there when it comes to our share price growth. And then Roddy, morning gents, Roddy Davidson of SureCap here. Thanks for your presentation. You mentioned actively exploring opportunities to scale. Does acquisition activity play a part in this process? Could you provide some insight into your ESG strategy and aspirations? How do you rate the potential of AFP to help you extend your new business momentum? How does that relate to other opportunities? You've made some notable senior hires. Could you comment on competition for talent and wage inflation elsewhere in the business? Right, let's take bits of those. In terms of acquisition, I don't want people to get carried away here. We have a plan, as I've laid out, within our current means to get ourselves back to the revenues we were and beyond. That is doable as we sit here today with the 6-point plan that I have laid out. Alongside that, we have ambitions to then grow organically and acquisitively. We want to do that through acquisition. We will have lots of conversations. We are having conversations because these things are about relationship building, so that we are ready at the time when we have all these other things sorted out to be able to move to that space. So that is actively in play. In terms of AFP, it is a good sector of the market. I tried to crack it in 10 years in my last role. I didn't crack it at all. Here, we've cracked it in 18 months with our first partnership with Sky Arts and Adobe. So I believe there'll be more opportunities. They're on the pipeline. I think it's a good complementary area. And what's critical is with the appointment of Tanya, AFP advertisers tend to like the fact-ent space, the popular factual space, more than the specialist factual space. So it was always going to be quite a slog for Zinc. But with Tanya's hire and further hires in that more popular factual entertainment area, so it will become easier, and the probability of AFPs will improve. Now we have our case studies coming through. And then in terms of notable hires, what about competition for talent and wage inflation? we know there is wage inflation, particularly in areas like production management, where because television has just got back into the market quickly, it's very hard to find teams and crew up quickly. So that is as much about passing that on to the clients. We are paid by our clients to make television, and our job is to manage them and to work with them to make sure the budgets work. But the critical thing is margins are doing well. So you can see that is manageable at the moment. And I believe our story is compelling. We've attracted someone from arguably one of the big 5 indies to join Zinc because she believes in our potential and she believes in the story, and she'll be rewarded as the company's market cap grows as well. I think I've answered all of them.
You've done a very good job. Yes, every question that's come through, Mark, you've taken, so thank you very much. And again, thank you to the investors that have taken time to pose those questions. Mark, I know investor feedback's important, and we'll shortly redirect investors so they can give you their thoughts and expectations. But I guess before doing so, if I could just ask you for a few closing comments just to wrap up with.
Well, I'd say Zinc is on the move. We've announced our largest ever series. We've announced our new partnership with Red Bull with higher value clients. Our new businesses are delivering over £6 million of new business. Zinc Communicates growing at 161% period on period. We have a new MD in London, and we have lots of prospects on our pipeline. Everything's moving in the right direction.
Mark, Will, thank you very much once again for updating investors this morning. Could I please ask investors not to close this session, as we'll now automatically redirect you for the opportunity to provide feedback in order that the management team can really better understand your views and expectations. It will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Zinc Media Group plc, we'd like to thank you for attending today's presentation. That now concludes today's session, and still good morning to you all.